Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, I would like to state the disclaimer here. Whatever stocks we discuss in this presentation or podcast are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart to get an overview of the India's general market, and we'll also give the O'Neill perspective how and what are the levels we are looking into. Currently, Nifty, you can see after a fall of nearly 1,000 points from its all-time highs, it has tested its 100 DMA and has found support previously as well as yesterday also. You can see. So 100 DMA will definitely act as a very good support going forward. In September, October also, Nifty tested its 100 DMA and has rebounded from that level. So historically, if you see, 100 DMA has been a very good level to track for the Nifty index compared to 50 DMA, which is the most tracked moving average for most of the stocks. But for especially for 100 DMA for Nifty, it is a 100 DMA, which is a level to be tracked. So currently the Nifty is trading at a tricky position near its 100 DMA. If that level is breached going forward, then the next support is at its 200 DMA, which is another 500, 600 points from the current price. So more sell-off can be seen if the 100 DMA is not hold on to. On the upside, we would like the Nifty to hold the 100 DMA and also reclaim its 50 DMA. Which is above 18,200, 300 levels. If that 200 DMA, 50 DMA is also reclaimed, then definitely overhead supply will come down and the resistance on the higher side will also come down. We can expect a good rally happening from there, but the global markets are not looking very good at the current moment. That is the reason Nifty is also slightly coming off highs. Whereas if you compare to Indian market with the global markets, we are still very resilient and we are clearly outperforming global peers. This is because mostly domestic driven growth is happening in the India, whereas globally the growth has come down. There have been fears of recession on the US, Europe, which are dragging those indices. But in India, the growth is still intact, and domestic growth, especially domestic growth, is intact because of urban and rural people able to spend good amount of money and able to put in money into the markets and to various businesses are also growing. Starting with banks, recently HDFC Bank, which is a major lender in India, has come up with good set of numbers. It has reported good loan growth as well. That indicates still people are taking loans. The companies are taking loans and they are expanding, which is a very positive sign. So this is a very good aspect on the macroeconomic front. India is looking very good when compared to other markets. So that is the reason the market is also holding up. Whereas if you see other markets that trading 10 to 20% of highs, that is a very you can consider a very gloomy situation when compared to Indian market. Talking about O'Neill's perspective, we are in a rally attempt. We would like to see the market exhibit a follow-through day from here. Follow-through day is when Nifty advances 1.5% or more on volume higher than the previous session. That indicates a good, strong price action coupled with volume action will indicate a good amount of buying, fresh buying happening in the markets. Institutions are also taking fresh positions. That indicates a fresh rally is about to happen. That is the reason we wait for a follow-through day before changing the market status to confirmed uptrend. Once we are in confirmed uptrend, our exposure towards the market will be maximum. The probability of breakouts will also maximum in the confirmed uptrend because around 70 to 80% of the stocks will move according to the market direction. So when we are in confirmed uptrend, these 70-80% stocks will also move on the higher side. Until then, we'll be on the sidelines. We are looking for stocks which are forming right side of the base patterns, which are resilient in the current sell-off which is happening in the market. These stocks will definitely lead the market going forward. So it's always good to have a good buy watch list of stocks, around 5 to 6 stocks, when the market direction improves, these stocks should be added to model portfolio because these will lead the market. And again, 100 DMA, as I said, will be a very crucial level to watch in the today's trading session as well. Some of the key companies which are in news and which will be under radar during the trading session are Rail Vikas Nigam Limited, with its joint venture with the ISC projects, has issued a project worth 166 crores for supply of a ballastless track for Surat Metro Rail project. Muthoot Capital Services has issued commercial papers worth nearly 30 crore rupees. RHI Magnesita received an approval from both exchanges, that is NSE and BSE, of refractory business of Dalmia Bharat refractories. This is worth of around 1,700 crores. Vishwaraj Sugar Company has approved a raising of funds up to 150 crores by issuing shares on rights basis. So these companies will definitely under radar, and good amount of action will definitely happen in these stocks in the today's trading session. Coming to institutional activity, yesterday both foreign institutional investors and domestic institutional investors were net sellers in the Indian market. They are, especially foreign institutional investors have sold heavily. They have sold more than 450 crores of equities, whereas the domestic institutions have also sold nearly 194 crores of Indian equities. So both the institutional investors were net sellers, which is not a positive sign. We would like to see the buying happening by these institutions because they have good money power. They can take the markets higher when compared to retail investors. Overnight, US market closed pretty much lower because of jobs data coming up. Dow Jones closed more than 1% lower, S&P 1.2% lower, Nasdaq, which is a tech heavyweight index, closed 1.5% lower. Asian markets are trading pretty much on the positive side. If you see, when compared to US market, it closed more than 1% lower. But the magnitude of positiveness is not so much higher. Shanghai is trading flat with just 0.1% higher, followed by Nikkei with 0.4% higher, whereas Kospi is trading with a good amount of gains, nearly 0.8% higher. SGX Nifty also yesterday Nifty closed around the 17,990 levels, almost at 18,000 level. SGX Nifty is indicating a 550 point higher opening, which is not a major higher opening, so it can be considered as a muted opening. But if the 18,000 level is held psychologically, definitely a positive sign, and if the 100 DMA is not breached, then it again a positive sign. We would like to see 100 DMA being held on to, and Nifty advancing further from that level. For chart of the day, we have picked Indusind Bank, which is forming a stage 2 cup with handle. Recently, it has tried to break out from the cup with handle base pattern, but it has found resistance at its pivot of 1273 levels. Everything about the company is looking very good, positive, fundamentally a strong company. You can see the company is able to report good growth in its EPS, and sales are also growing. EPS rating of 81 indicates a good fundamental strong company, whereas the technical parameters are slightly on the fair side, not so bad, but RS rating has stayed constant because the stock has moved sideways. RS rating is 71. When the stock breaks out, definitely this RS line will also improve on the higher side. A by D rating is also fair enough with B rating. Number of funds which are invested in the stock have also seen good improvement in the recent quarter, that is the September quarter. Nearly 60 funds have been added in terms of investment into this stock. Again, a positive sign. Overall, if the stock breaks out, for outperformance. Thanks for joining today's people, and have a good trading session.